We're live. You know, I try and make him do ideally when Pat McAfee went nuts and he kind of like freaked out Nick Saban during college football when he's wearing the. I gotta get Rocco one of those like fancy little ties, you know, the cowboy little ties. Anyway, yeah, all right, we will go do our video now. I am on my way out of here, going to the ALCS game 2. Go Yanks. Okay, so let's go through today's trading. Some interesting stuff happened. Did not trade well all day. Let's take a look at the markets. Let's share the screen doc here. All right, so trading trends. Today is Tuesday, October 15th, 2024. Interesting little graphic here. I'll make this bigger so you appreciate it. The headline, and pretty good here. I actually like this. If you notice what these are, semiconductors, right? Semis fell hard today, 5%. I don't know if you saw, but ASML had some not so great news on the slowdown in AI spending, and they're a major corporation. You ideally want them to be on the up and up and guiding up. So not great news. It sank the entire space down 5%. You do want to notice, however, that we were talking about it on Friday's video because it was one of the top two gainers. SMH was up 4% in the past 5 days, gave it all back. We had said before, specifically SMH, we'll take a look at the chart. It was getting rich at around 260. I said it didn't have much juice, much meat on that bone, just nothing to do there. And then it gave back 5% today. So pretty much, exiting there on a short-term basis. We'll take a look. Also, healthcare and energy also dropped, and a pretty big move here in the bonds. Rates dropped, which pushed obviously real estate as that relationship, usually benefits the other. And the new all-time highs for the financials, industrials, equal weight. Just a little thing on this real fast. Equal weight. If you looked at the all-time highs today, I believe it was a fifth of S&P 500 member companies, so that's massive. And the breadth rather was across the board. You had Carnival Cruise Lines, you had McDonald's, you had Apple. It was really the gamut. So this market is zooming here. Rotation is the lifeblood of a bull market, and it's working out well. XLC behind Meta and other names, and the home builders, new all-time highs. So very. Let me just. 1 second. I don't make sure I misspoke. Are those all-time highs or new 52-week highs for those? Those are 52-week highs for those names. I apologize. Something happened on that, so I will change that. But that's after. All right, starting off with a typo, but here we are. We're going with the charts here. So real estate, big gainer, up 1 1/3%, and TLT up pretty similar. And we'll look at the big moves down here. All right. So first, let's take a look at the chart. This is the intraday chart of the S&P. Pretty interesting. We opened up to, who's that handsome man? All right, so here is the intraday chart. So traded poorly pretty much all day. Here is the opening bar. Really never got out of our own way. Trading below VWAP throughout and hitting a low here at 3:30 p.m. Pretty easily got rejected at 585 level. I've been saying before, the market looks great. I'd rather be long than short, but there's a lid in terms of the top short-term target around 584. And we got there, ironically, a little bit above that this morning, and they rejected it. So let me zoom out. Now what going forward, I did a little bit more charting work, looking at the other indices to catch up with the S&P. And it looks like 3 out of the 4 major indices had the distribution phase ending on October 10th, thus an accumulation phase ending on or around October the 25th, but again, with a tight lid on the market. So I don't know if that makes sense to you, but basically, especially due to this give back, ugly looking candle here, but my lid or ceiling for the market all along for the next 2-week juncture or so is 585. We got there at 9 a.m. pre-market, and we gave it back. I expect some sideways action, and then potentially we reclaim that 585. But definitely rather be long than short. But yeah, on a pullback, you can easily pull back to 570 as well, which is only 2% away from here. Market looks strong, and I still anticipate get ready for a pretty strong fourth quarter rally. I know it seems consensus, but that doesn't mean it's not going to happen. And yeah, I was doing some also longer term charting work, and my projection, not that it has to come true, but very realistic. I did a lot of work on it. Not a lot of work, but it's targets. 650 or 6,500 for SPY by the end of April. So it's pretty much assuming the same altitude and momentum we have as now. We'll see how it goes, though. You have a huge catalyst potentially with something that goes in the gears like ASML guiding lower or warning. That can have a huge detraction in the whole AI trade. So we'll see what happens. But again, to sum up this, rather be long than short. The lid, though, so in terms of downside risk, 10 points downside, 5 points upside. So again, not really chasing longs here, but I'd rather be long than short if you got your positions. Today was a nice rotation for some of the some of the beat up names as of old. So let me show you what I mean. So today, big gain in real estate. Let me pull up the XLRE. Obviously, with the huge drop in rates, it scintillates and incentivizes, the real estate group. People like it. Look at this clear bottom here. It's just a very interesting, just strict support there. 43 bucks. We'll call it 42.85. That goes back to the end of summer. I respect that. 52-week highs made September the 16th. And big bars here and still close towards the high, up 1.25%. Let me look at the target here. I am in IYR, which is very similar to this. I like this group. Obviously, I think this is headed towards about 45.60 over the next 2 weeks or so. So I think that is going to be a little bit more vol expansion. I think you get a little bit more potentially. We'll take a look at the TLT chart. That's a teaser. They call that in the biz. What biz? I don't know. Show biz probably. And I guess this is a show. I'm not sure. Ron goes to sleep. He's a quiet snorer, though, so you never hear him. And that would be tying the 52-week high or eclipsing. I'm going to go with the tailwind and all the momentum here, although this is starting to slow down a little bit. But I do think we get new 52-week highs in real estate in the next 2 weeks. I'm happy to be a part of this group. And then the other thing that moved monster, there's only two multiple Sigma movers today that were uncorrelated. It was real estate and it was bonds. That is it. That literally, I challenge you to look at the charts or the movers today. Okay, so TLT, I'm just making sure it's up here. My screen's, man, it's like that semiconductor robot thing melting. I like the picture. It was weird. It reminded me of like a Deftones cover, which is a compliment. All right, so TLT up 1.2%. Obviously, rates have been all over the place as of late. Specifically, we're looking at bonds here. So specifically, looking at the 200 moving average, it's actually starting to go down after we put in a new high on September the 17th. So that's pretty interesting to see that start to go lower. Again, TLT was the 20-year bond equivalent here is really recouped itself only mid to end of July, where it got those overbought conditions during the Japan Nikkei crash August 5th. That's why you see that outlier. And then really an ugly sell-off since September 17th, meaning, of course, September 17th was the day before the Fed cut. Ironically, what did we say then? So Fed cuts rates go down, bonds go higher, right? Well, someone forgot to tell TLT, but obviously has different ramifications on the longer end in terms of how the government spends. So it had different acceptance for how bonds have been treated. All that being said, a perverse, some might say, reaction to the market. And it had a little bit of a break October 1st, and now it's bucked the trend. And now what? So I do respect and I do like the 200-day moving average, which, if you want a numerical attachment to it, is 94.15. We spring shot above it today, closing at 94.94, up 1.25%. I like, not for longer term. I don't want to buy this in terms of all the investments out there. But the Fed is cutting. All that being said, this is the 20-year bond. I do like this. First stop, 96.5. I do expect it to get there. If it's got more juice and rates really start to drop, I really don't anticipate that happening. But if it does, obviously this will charge higher towards 98. But I think this gets to 96.5, which is its 21-day exponential moving average. So about another 1.5% here. So you can expect, obviously, it's kind of similar moves. Real estate would drift up. Bonds would go lower. Let's take a look at this. The semis had been on a tear until today's news from ASML down a massive 5.5%. We were looking at the chart before, and we said this was super rich. I had about a 260 target, maybe 262 to squeeze out of it to get back to those July highs. And I said, that does not look like it's going to do much more than that. Really, I have it on my notes here on my other sheet. 261 was really where I had it. And that is, we got to 262 on the 14th. And then today we got to 262, and then it gave it all back. That was literally the first minute. And then it gave it all back to close pretty much near the lows. Now what? I think it hovers right around here, 247. I don't think the group gets super ugly. Even if you do get the rates to go lower in the next couple of weeks, this is still a strong group. The one thing is just not great. In terms of this, it's still basing in terms of a box of where it's been in July from 200 to 280 before I do think it springs higher. I don't think the AI trade is done or anything like that, but you do have to be a part of real estate and these other bull market moves that have, captured the market. It's Bitcoin, it is real estate, and it is semis. You still can't ignore this. Once this breaks through, it's going to break through. Apple breaking all-time highs today. Was great to see a tech company doing it. Like I said, it's McDonald's, it's Goldman Sachs, it's Morgan Stanley, it's ICE, it's different firms. It's not what you think in terms of the Mag 7, which I don't really talk about a ton, Mag 7, because there really is a lot of breadth in the market. So all that being said, again, tech, I just don't think this could get back towards 260, but don't love this area right now. I do see it oscillating around 247, like I said, for the next 2 weeks or so. So probably choppy trading in this group. And I'm long NVIDIA. NVIDIA today offset that loss from NVIDIA today, offset my strong gains in retail. Very interesting bifurcated market today. Healthcare down 1.2%. United Healthcare had a horrendous day, which is what dragged down the Dow 80 bips, and it dragged down healthcare down 1.2. My other screen is pulling up silver. That's not helpful. All right, so here's the chart, 52-week high. Don't like that candle here. It tells me that 160 is a ways away. I am long the DC 160 calls. Still don't hate the group. I want to see this get some momentum. This doesn't seem to be the loved group right now. I think it could potentially make a move towards 155 to 157, not much more than that over the next 1 to 2 weeks. And then if the bullish case doesn't take off, I just see it oscillating around here around 153. So I know my downside with this. I'm not really, nervous or anything. But today was an ugly day for it due to the United Healthcare news. Okay, and then, oops, that is a typo. XLRE got not absolutely hammered, but 3% was a big move lower. Oil was down significantly. We'll take a look at that chart later. But look what happened here. So I had said before, obviously XLRE shot up on the 7th on the whole, the Mideast geopolitical, missiles being fired. And then today, doesn't look like a massive candle, but today Israel, I believe, said they will spare the oil in Iran, and this group took a hit. It's funny, such peaceful words would adversely affect, but that's what happened. They said they're going to spare it, and then boom. So yeah, this group looks like crap. Some of the individual names, ExxonMobil is a leader that hit, I believe, 52-week high. So some are bucking the trend, but overall, I think this group trudges towards 85. Again, I would have started the counter right here, October 2nd. Okay, the beginning of the bull times here for energy, but it's just not the area I want to be in. I know, obviously, over the past 4 years, 5 years since oil went negative, an amazing market. I was looking at a long-term chart, and it looks like all the other sectors are just catching up to XLE here based on the COVID 2020 lows. And it's a pretty fascinating chart. If you want to go out through the sectors and do that, I would put it up again. I'm going to do a Yankee game, and you can do it. But maybe I'll do it the other tomorrow. But so here, rising 200-day moving average, but not the strength you want to see. XLE, like I said, I think it's going to go lower towards 85, 86, and this 200-day moving average, kind of like that wall, that scene of tug of war from Squid Game. Very meaningful. The gap here is 89.60 for XLE. Very important. It's going to go above it a bit. It's going to go below it a bit, and I think the elevator is going down on this one for the next 2 to 3 weeks or so. Yeah, and that candle tells me, especially with the news today, about them sparing, barring something else geopolitical, that doesn't look good. That doesn't look like buyers are stepping in right here. All right, so we're talking about those semis, healthcare and energy, because they got handled today, all down. Semis 5.5%, healthcare down 1%, and then energy down 3%. Top 3 gainers of the past 5 days, no repeats in charts. Bitcoin has finally done what we've been waiting for it to do. It's been resting, and then finally it popped today, up 1.2%. Over the past 5 days, it's up 7.5%. I'm tracking the IBIT. So almost it did a lot here in just 4 days, right? That's typical Bitcoin fashion. This specific ETF has gone from low to high, 33 to 38, for goodness sakes, in 4 days. Obviously, this tracked out the weekend since ETFs only traded when the market's open. That being said, my target for this was about 38.75 or so, maybe 39 if you get some vol expansion. I think you'll get to not even that high, the July 29th highs. I think it stays about around here. I don't think it gets to that candle. So I still think we're range bound. That makes sense with a lot of the other charts. We'll see. MicroStrategies, there's a lot of other names that are breaking out, and they lead Bitcoin as it were. But so for here, I don't see a ton more to go. Another 3.5% or so for the next 2 weeks. I still would rather be a buyer than sell. I think it's Bitcoin's time. I do think it has a ceiling right about 3% from here. And to just give you an equivalent value, since everyone's looking at the same thing. Yeah, again, so about another $900 or so. Yeah, well, actually, hold on, 66. Yeah, about 68K is what I said in the last video. So about 68K. All right. Next. So it's funny. These have been trading together somewhat. The regional banks and Bitcoin. Regional banks right behind, up 7% in the past week. So regional banks, I bought the KBE, which has a lot of representation of these regional banks. It's not just JP Morgan. So I still like this group. Again, very similar to what I'm saying on the market as a whole, pretty much for all the charts now. Came into this with no bias. Like it, would rather be a buyer than seller. Look at this rejection here. This traded as high as 64 today. Obviously, the market traded poorly all day. But this handle doesn't tell me that on the 52-week highs that folks are chasing this and want to buy. It tells me that, top 60. So it may revisit in the next 2 weeks. I'd rather be a buyer. 1 to 2 weeks. I'd rather be a buyer than seller. I literally am long KBE, these calls. But yeah, a lot of these things are at target. They're just stretched. I don't want to chase them here. That's what the charts are telling me. Just basically, a person on the treadmill here. They're just gasping for air. I can tell they're not going to do, set a new PR. All right. GDX is the next one. GDX up 4%. I'm long this as well. This one, so take note, this one finally, I think is actually, it was up 1.3% today. This one I think can move. This one I like for the next 2 weeks. I'm glad to be long. I believe it's November or D's calls. I think they're D's calls. And they are, I believe this is getting to about $42 or so. I think you are going to get new 52-week highs in this in the next 2 weeks or so. Gold hasn't had an amazing time, but this group looks nice and it can move. These has momentum to its back after that bottom on October 9th. This group looks strong. I would be a buyer of this if I wasn't already literally long. All right, and the top 3 losers the past 5 days. China still in focus. China, the biggest loser, down 12% over the past 5 days. Today, down 4%. So this is still mean reverting, where you're riding a rocket ship from here to there. Look what we're going to. So just really fast, again, I'm not going to drag this out, but I said before, you have to go on it was a 3-year time frame. That made sense at this point because of the rocket ship it was. And I wanted to see it close. These are week-long candles. I wanted to see if it can close 31.16 for about 2 weeks. Okay, it's I don't know, it almost reminds me of that scene from 4-Year-Old Virgin, the celibacy. It's like, oh, I'll hold you up for 10 dates, 15 dates. I'll match you 20 dates. So for this, I almost wanted to, my brain's psychotic and that's how it works. So for this, it was like, I'll raise you 1 week, 2 weeks, 3 weeks. And what happened at the chart? Crapola. It absolutely didn't do it even for it couldn't do it for more than 1 week. It literally closed above it the week of the 30th, and it couldn't close above it the week of the 7th. So much more in focused rally. So again, if I go in the 1 year, looks like it's headed towards it. It is rising. $24 is that number on the 200-day moving average. I think it's going to be interesting. I want to see how this falls. Ugly looking candle today, down 4%. Still a super volatile trade. Again, the importance of the 200-day moving average is we all agreed before this breakout for the past 10 months that this equity class of China was worth $23.75. And then after the stimulus, we said it's worth 36. And now we're trudging back towards that now adjusted 10-month or so number calculated of all those inputs is 24.19. I don't think it's that crazy to say that it's gonna get there. I want to see how it does. I mean, already sliced through 27.70, which is its 21-day exponential moving average. So that doesn't give me a ton of faith. I would say your next big block or next big target is 24.20, which is bigly away. That's about 10% away. So this could have more in the cards to the downside. All right, nat gas. Of course, I'm trying to make a trainer for the game. I'm blathering about China. All right, natural gas. So this one, pretty much as we expected. I did not see new 52-week lows in the cards. That's what it looks to be. We are flat today on the market. I would think this is going to base around 1390, literally right around where we are here. If you were inputs, from here, that's a perfect trade. If you had done this October 3rd and right around this $14 level, I would exit. That was a perfect tag. 1674 on October 3rd. And then you exit right here as it touches lower Bollinger Band, and that's your trade. A massive, massive one if you just rolled, 2-month out put spreads, literally meaning you bought even at the money, taking less risk because these are high vol, and you bought at that day, the 17 or the 16.5 puts. But net gas. So all that being said, that trade looks to be wrapping up. I think this has got on the bottom, like I said, around 1390, and then it'll start to ascend towards $15 if you want to play it the other way. I think that's what looks to be in the cards. And then lastly, but not leastly, although it looks pretty least today, USO, oil down 4%. Massive move, almost equal, like China alone. So yeah, I do not like this group. Similar chart with XLE, right? So this is for the USO 200 moving average. You almost take what I said for XLE, that important number, the 200-day moving average, going above and going under it, slicing like that tug of war scene from Squid Game. This number, you could call it 75 even, is an important one. So I couldn't even reset the clock here. October 3rd, I would have said, let's start to go. And then it could have given me 3 days. So we're 3 dates from that movie. I'm going to have to rewatch that again soon. Great movie. They don't make movies like that anymore, very unfortunately. Okay, yeah, so I don't like this group. The oil, I think, continues to go lower. I think this heads towards $68. So about another $5 or so. I don't think this looks great. You got like another potentially 6% or so to the downside. So for the past week, if you were short China, short nat gas, and long Bitcoin, congratulations, you're absolutely crushing the market. Those are 3 best trades out there. Okie dokie. I will see y'all boopity boopity boopy another time. Go Yanks. I will see you guys tomorrow or the other day after that. Peace.